Hello, this is a Chartprofit video. We're about 3.5 hours into the trading day on Friday the 1st of April. This from the pre-open today. We're looking at the Emini S&P. We've had reactive buying on Tuesday here and aggressive buying here. And on Thursday there was a mild response, some selling here, significant selling. That's the red. I said in my comments pre-open today, sellers were active on Thursday, but only an overlapping slightly lower value area was generated. So this was not convincing effective activity. I went on to say that even so, by strictly applying my rules, I had to mark aggressive selling, as we've seen here. So it's this value area relative to this one, that's not particularly effective selling. I want to say that so far this looks like normal corrective activity with buyers resting. So buyers resting, looking for a response from the sellers. So buyers resting probably ahead of the jobs data today, which has just been released. That was pre-open. Emini was lower overnight. We have this first level support really here. Short-term support at 2033. That's just the minor 14-day point of control. I went on to say that I would be more convinced that the sellers were actually taking control if significant selling was marked below that level. So if we saw significant selling marked down here, that would indicate a test of the long-term first level support at 1990. So here's today's bar, the low of today's bar, down around 2035, just above that, even that minor first level short-term support at 2033. E-mini has rallied back up, it's actually printing now back above 2050. I'm making the assumption that until we see even that minor indication of weakness below here, I'm targeting this kind of level up here around 2090. I have to say the sentiment, which we'll come on to, doesn't support the view, but we are seeing some technical divergences which might suggest there is some kind of top of some degree coming. You can see here on the breadth chart through Thursday, these top two indicators showing a negative divergence here, with the price action which is heading higher. That will often precede some weakness back late last year, for instance, as you can see here. But as long as this bottom indicator, the percentage stocks greater than their 50-day moving average, as long as that number, which is really high, actually in overbought territory, but as long as it remains above 50, and this middle indicator, 5-day moving average of the net new highs 25, remains above 0, this middle section of the pulse chart here, which has been green from back here somewhere, remains green. But again, you can see on the chart here the sort of technical divergences I was just talking about. We're heading higher on price, higher highs, and the momentum indicator is heading down. And we know this indicator has a habit of getting back to the level at 0 here or close to it when it's turned down from an elevated position, as it did back here earlier in March. You can see what happened back in October here when the momentum turned down. That was typical. It did eventually get back to 0 here, and the market was actually lower than the point where it turned down. That pattern is not an immediate call to action, but it is usually a warning that we should be on our guard if we do see any convincing evidence of selling, so we're watching for that. Also noting here on the diamonds chart, ETF DIA, that we've reached the 2-year resistance up here at 177.25, this level here. Price printing time above that up here would be a positive, but you can see how far and how fast this chart has rallied. We're getting overbought nonetheless. If we see price action above 177.25 early next week, that would be a positive. You can also see in the small caps here, the Russell 2000 ETF IWM, this half range level here. It's just above the current price action. It's the half range off last year's high to the subsequent low, and that again can often be a significant chart resistance to overcome. So those two charts, diamonds and IWM, those levels certainly worth monitoring going into next week. Here's the German DAX chart. Interesting level here. The major has migrated slightly to 97.40. That's this red line here. It was probed today. We've closed, I believe, just above that level. Again, an interesting chart to monitor going into next week. Price down here would indicate weakness. Currently we're holding that level. Similar on the FTSE 100, the UK FTSE 100 index relative to the US charts. You can see here still printing below its halfway point, relatively weak by comparison. The 12-month is at 61.39, this is level here, and I believe we've closed very close to that level today. So again, important level to monitor going into next week. If we do see price printing time above that level, suggesting a breakout above here, this level comes into play, which is the halfway point just above 6,300, and again that could be significant resistance if we see it. We're seeing strength persisting in the bonds charts. This is the T-bond ETF TLT, the 5-month at 128.43. We talked about this minor point of control. It's probed earlier in March. We're printing above that level, so in the short term that's strength, printing above the halfway point down here of last year's high, so I see no weakness in the bonds here at the moment. Looking now at gold, this is GLD, the gold ETF. The major has just migrated up to 118.05, and we're currently printing below that level. And often when we see a point of control migrate, it often happens just before a directional move, so we need to see where GLD sits relative to this level next week, but also the previous point of control, which is a little lower at 115.50 here. Looks like support today, so price below here I would suggest that indicates further weakness, and price back above here I would suggest indicates further strength. With some time at 115.50, of course that point of control could migrate back to that level. So again, for me, an interesting chart next week. So we're seeing some weakness on that gold chart. Don't see much strength coming through on the dollar index. Just this week we've probed down to its lowest level since October. As we know, the 2-year is quite a bit higher at 97.40 in the halfway point here. So this is actually weak price location still. Another migration is on the Euro FX chart. We've seen the 3-year move to 111.98, which is here. And we're just seeing this chart pushing out to a new multi-month high. In fact, today, current levels, I wouldn't look at the short side of this chart unless we see price printing back below that halfway point here, the halfway point from the March low 2015 through to the subsequent high. This would be weak currently relative to the dollar. The euro looks pretty strong here. Relative to the dollar, the pound does not. We're back below what is now the 8-month at 142.60, which is here. Had a rally earlier in the week, but that's certainly faded at the end of this week, and we're currently printing below that level. Okay, I should have looked at the oil chart. We'll do that now. This is the United States Oil Fund, USO. 6-month, as we know, is currently at 9. That will be significant support if we see further weakness, but you can see this week been pretty poor for this chart. The first level support is actually that halfway point, which is just a little lower, but this is significant. That's the 6-month point of control down there at 9. Price underneath there definitely suggests a retest of the low. Equities were tracking oil very, very closely, as we know, for many months. Seems to have been a little disconnect there just over the last few days, with oil obviously weaker and the S&P finishing pretty strong here. We'll look at the sentiment now. This is the VIX, currently printing around 13, which is close to the low it reached last October. So we're seeing something here which not necessarily seeing in other sentiment indicators, basically a high level of complacency. Certainly not seeing that in the RightX data, or my version of the RightX assets ratio. This is probably the most supportive indicator that I can see at the moment in the sentiment. As we know, the market's rallied really strongly from the February low, and this ratio has really shown no signs of life at all. That indicates that the RightX retail traders really do not still trust this rally, and that kind of nervousness or wall of worry is usually supportive. And if we just expand on that, we've shown this chart over the last few weeks. This is the bull fund assets that I follow in isolation, and you can see when those bull fund assets get really low, usually indicates the market is ready to rally, and it has been from this point, but the level of bull fund assets, although it's pushing out to a multi-month high at the moment, still relatively low here. And the bear fund assets in isolation at the bottom here, we know they peaked over here when they exceeded this point. That was the highest level in the bear fund assets since November 2011. We saw the contrarian signal that gave us playing out with this rally. Bear fund assets did fall pretty quickly, I suppose, from there. They're still relatively high, and in fact over the last 2 or 3 days we've just seen them rally back up. So I'd classify the RightX data as pretty supportive for the market. I'd say the public poll from AAII is neutral at the moment. If we see that previous peak in the 4-week moving average, that's the black line of bulls minus bears, the net, if we see that level exceeded, that would be an interesting development and possibly suggest that public are at last getting excited about the market, and that might mark something up here. Currently I'd say that is a neutral indicator. I'd also call the investors' intelligence neutral unless this level here, again in the 4-week moving average, is exceeded. The exposure index, which measures current equity exposure of active money managers, I would definitely say this is in neutral territory right now. Finally, if we look at the LIPA US fund flows, which reported equity fund including ETF outflows again this week of 2.6 billion, and the 4-week flow very close to zero here. Certainly neutral as well, not suggesting any level of over-optimism from the retail trader. So that concludes. We can say that the sentiment shows us very little to be too concerned about. There are some technical divergences, but as yet no significant selling of any importance, and the equity indices remain in strong price locations. But there are some very interesting technical levels on the charts which we highlighted earlier in the video, and I will be monitoring those going into next week. So that concludes. Once again, I wish you a good weekend and thank you for watching.